Well, my name's John Dietrich. I'm a finance reporter in London with Quartz, and have a fantastic panel today to speak about, well, to meet the next generation of FinTech unicorns. And I know everybody, I know there was just an introduction of our great panelists, but I want to just take a moment and give you each a chance to describe your elevator pitch of your company. I know that many of you are already familiar with these companies, but if you could just give a quick description before we go into questions about the next generation of FinTech unicorns. So I'll start with Lucy.
Okay, hi everyone. My name is Lucy, and I'm the co-founder of AirWallex. We are a global FinTech player in the payment space. We provide local financial infrastructures to businesses who want to expand overseas with a combination of money collection, FX, and local payouts.
Got it. And Sunil is the CEO of OakNorth.
Sure. Well, first and foremost, thank you all for coming out, and John, thank you for having us. So OakNorth's a credit analytics platform. What we do is we help banks and financial institutions better be able to manage risk and give loans out in the kind of middle market sector. So think of us in the sector around the $1 to $45 million in loans. We also have a UK bank, which serves kind of as our test laboratory for all the analytics that we have on our platform that's available to other institutions.
Got it. And next, Tim Sievers, CEO of Deposit Solutions.
Right, yeah. Hi, everyone. So Deposit Solutions is an open banking platform for deposits. On the one hand, we enable banks or even non-bank point-of-sale partners to offer their own customers third-party deposit products really easily under the existing client relationship. And on the other hand, we enable then banks to fund themselves through our platform, get access to retail deposit funding, again, very easily and with a large addressable market. And we work for about 100 partners in 18 countries today, and also run some proprietary direct retail platforms ourselves.
Great. Well, and some of the context for this conversation, obviously this year we've seen some unicorn IPOs. Some of those have traded down in the secondary market since their IPOs. And I wanted to begin by just asking the panelists, what is different about FinTech unicorns, and perhaps what is different about your companies from some of these companies that have traded down in the secondary market recently? What's different? What metrics are different than what those companies perhaps have been through? Perhaps I'll start with Lucy, if you don't mind.
I think the question is not what is different. I think every company's situation is a little bit different. I think in terms of the payment space, we've seen a lot of competition in the pricing, right? Like the take rate is going lower, so people are finding it harder to be profitable. Hence, in terms of IPO, then it becomes the question of, what is the actual value of the fintechs that the general public is investing in, which is why I think there's a trend of companies staying private longer, because you really need a lot of time to build up the fundamentals. And I think at the end of the day, the companies that really succeed are the ones that invest time and money into infrastructures, into compliance, and getting the foundation right, as opposed to just purely doing the applications and doing the user front experience. Because without the actual the ground foundation being built, you can't win the competitions in different regions by just doing pure applications.
It seems like with payments and with remittances and money transfer, there's a very clear way to monetize. There's a very clear way to drive profits, as opposed to some other types of business strategies.
Yeah, I think with payments is purely by volume, right? Yeah. Most of the time is by how much money people transact on the platform. And I think what is a little bit different about AirWallex is we're very focused on the B2B side, as opposed to just pure remittance on the consumer side.
Mm-hmm, mm-hmm. And next, I wanted to ask Sunil the same question. Sure. Why perhaps is FinTech different than some of, say, the Silicon Valley companies that have IPO'd and traded down in the secondary?
Yeah.
What makes that sector different? What makes OakNorth different?
I think the one thing that I would say about FinTech or the world of finance broadly is it's an incredibly large market space. So if you think about total opportunity, I was at Google before. Advertising is a $1.7 trillion market. If you think about just mid-market lending, which is where OakNorth plays, that's a $7 trillion market. You know, it's 50% of GDP of a lot of countries. It's 50% of employment. So it's an incredibly large space in which you can have a very vibrant ecosystem of startups that are in investment stage. As Lucy said, everyone is different, that are profitable. We've made a decision to be profitable pretty much from the second year of our existence. I think the underlying question, John, around valuation and unicorns is our view has been that valuation's an outcome of building a great company. It's not an objective. So if you build a great company, you're obsessed about customer experience, you're obsessed about delivering value to your customers, you build great teams, you build great products, the markets should value you appropriately as a result of that. And that's how we've thought about kind of, managing investment and growth in our business and profitability, is starting with the thesis of customer obsession, not valuation, knowing that ultimately, if we do a good job, valuation will tell us how good we've done.
I mean, do you think, Sunil, especially given the amount of investment that's gone on in FinTech in, say, Europe and in the UK, do you think there's any risk of froth in FinTech? Do you think that the evaluations have perhaps gotten heady in the sector in some places based on the conversations you're having? Or I'm sure it's case by case, but I just wanted your thoughts on that.
Yeah, I mean, since we, as I just said, we don't focus on valuation. We don't really have a point of view on whether valuations are too high or too low. There is obviously a lot of liquidity in the market, but there's also a lot of innovation in the market. And markets are much more global than they've ever been before. So I'd be hard pressed to say whether I think the markets are frothy or not. There's definitely a lot of opportunity and a lot of innovation everywhere we are in the world.
Got it. Well, and Tim, same question. I mean, what makes your company different? And whenever you're thinking about, whenever you're talking to, Deutsche Bank or you're talking to other investors, what makes your company unique?
Okay. So I think generally with regard to valuations, we are all, I guess, growth stage tech companies. So valuations are all about the future, right? So in a way, this is about performance expectations, and what has helped us over the years, I think, to build a valuable company is that we are to some extent all the ingredients are there. So there is a very large market. We are working in the deposits market. It's in Europe alone, more than 10,000 billion euros are in deposits. It's very underserved. You could sort of say that maybe the last innovation has really been online banking in the space. Talking about deposits now. I mean, this is simple savings products, right? So it's relevant for really many people, and it's 40% of bank balance sheets that are funded through deposits. So this is a major product category which is poorly served, and we have brought a new proposition to this space. It's taken us some time as well. I started the company in 2010, so it didn't go overnight. But when we were then able to show that there is a product market fit, and that banks use it, they like it, they do more business over time with us, then that's sort of what I think then our shareholders think is this could be a very large company going forward, and that's the basis for the valuation too. And I think then maybe the other ingredient or the other aspect to this, which I think also applies to I think at least to the three on stage, and maybe also some of the other companies that have received rather high valuations, is that there is sort of an element of incremental business is only causing relatively minor incremental costs, right? So you get really attractive commercial dynamics when scaling, because there's sort of there's an infrastructure that you have to set up, you have to invest in it, and it's sort of expensive to build. There's fixed costs, but then when you scale business, the marginal costs are coming down and are really low, and that makes for a great, not just a large revenue, but also a large profit, potentially a large profit company.
Mm-hmm. Well, and just building on what Tim was talking about, for an entrepreneur or for an investment firm who's working with the startups that it's investing in, what tips do you have for building a fast-growing company right now? What are there any particular tips or steps that you think are especially key for somebody who's trying to grow a company quickly? Either Lucy or Sunil.
Okay, I can start. So I think the fundamentals for those of you who don't know, Airwalls is only 3.5 years old. I think even till this day, we have like 400 employees globally. We still think hiring is one of the things that, if you get right, it can make so much difference. And we've actually learned our lessons with like bad hires and making HR adjustments and all of those things over the past 3 years, and still struggling with it. But I do think people make the difference when you're growing a company. And also in the space of payments, there's a lot of regulatory risk, and I think investing enough time into getting your government regulations and the boring stuff right also makes a very big difference, because you don't want to be operating in a very risky environment without your license, without the right communications with policymakers. And these are the things that everyone wants to be building product, they want to be innovative, but at the end of the day, FinTech is there to also improve the regulatory side of things as well. So I think regulations and people are something that's very important when you're growing a company.
How is hiring right now? I mean, in terms of just the talent, is it expensive in all jurisdictions? I mean, is it? I imagine it is, but is it difficult to find talent, say, in the U.S. relative to Australia or Melbourne, where you have an office, or?
So I think if you take Melbourne as an example, there's a very big community of expats, actually. So post the GFC, there's a lot of Europeans and Americans relocating to Australia, for a different lifestyle, and the big four banks are hiring quite aggressively back then. But in terms of the job market, I think, there's a lot of people with knowledge from Silicon Valley willing to relocate these days. But Sunil and I actually talked about this backstage. We still think some of the best talents are still in the Valley. So in terms of cost, yes, it's expensive to hire in the Bay Area, but it's something that we have to do in order to gain that experience and also the domain knowledge in order to build our product.
And Sunil, I was just wondering, what suggestions you would have as well for, entrepreneurs and fast-growing companies, especially, I mean, your background spans both finance and tech in the Valley, and so I just wondered your thoughts on this too.
Yeah. I think as a founder, the two biggest things you might struggle with, we definitely struggle with, is both points that Lucy made. One is, the war on talent is very, very real. Wherever you are in the world, it's incredibly hard to find the right people with the right skills that are a good cultural fit for your company. And we see that everywhere in the world, in pretty much every domain. But that is one of the key ingredients to you being able to grow your company. I think the other tension in a high-growth startup, particularly in regulated markets like all of us, is the dichotomy between going fast, but sometimes having to go slow to go fast. And that tension of how fast do you go to keep scaling, to keep growing, while knowing that you have to build on a foundation that is well thought through, which might take a little bit more time. That trade is always very, very difficult for founders and executives. But I would say it pays dividends over a period of time, so it's definitely worth investing in. The costliest mistakes you can make are, as Lucy said, hiring the wrong person, ending up with a wrong product, because unwinding those actually is far more costly and time-consuming than having put in the yards up front.
When you mentioned the war on talent, and I wanted to ask Tim, I mean, has Brexit had any impact at all on that? Like, are you finding any changes in the hiring dynamics because of Brexit, or does it feel the same to you in Germany, or?
Yeah, okay. I mean, we are based in Hamburg, so we've had a hiring challenge actually the moment we started to scale, because the labor market. Hamburg is a beautiful city. I'm inviting everyone to come visit, but the local labor market is quite small, especially for pretty. I mean, we have sort of pretty specialized people we are looking for. So we had to open up. I mean, the decision I took quite early on was that we changed the company language to English. Started off as a German team, and we started recruiting from all over the world. So we have about 300 people, and they come from, I think, 43 countries or so, and most of them are based in Hamburg. I think we probably have about 200 of those 300 are in Hamburg. So it's possible, but we had to do a number of things, and that also comes with sort of flexibility on some things. So we have a prayer room, and we have sort of accommodation. We kind of try and work around the cultural and needs, and that people have when they come from somewhere around the globe to Hamburg, and try and help where we can. So I think it's something that we were able to solve. We have a great team. We have been able to grow it to 300 people in only a few years. So yes, it works, but it was definitely a challenge. Brexit probably has had only a limited effect on us because we have a London office, but it's 7, 8 people or so. It's quite a small team. It hasn't affected us that massively, I'd say.
Got it.
And I don't know. If you sort of sorry. The first part of your question I haven't addressed, but
well, yeah, I was just curious about the hiring dynamics in Hamburg, and it sounds like it's challenging as it is everywhere. I guess one of the things that came out of our preparatory call for this panel, I'm guilty of putting unicorn in a few headlines, and perhaps it's become a little bit of a distraction for other things that we should be talking about. And I wanted to ask the panel, what should we be talking about in fintech startups beyond just valuations and beyond just the focus on who gets to unicorn status first and which country has the most unicorns? What other things should we be talking about? What other things are important? I think maybe Sunil, maybe you have some thoughts on this, or?
Yeah, I kind of touched on it with the thesis that valuation's an outcome, not an objective, and being called a unicorn is wonderful, but it's an outcome of building a great product, and I'd love to see us spend more time, particularly in the tech industry, to talk truly about the underlying technology, what's innovative, what's different, what's the customer experience. I think the best metric, and I don't know if anyone's ever figured out how to capture it, is rather than valuation, it's customer value. So what value do you bring to your customers? What's the underlying technology? Why is that different? Why does that change the landscape of ecosystems? And then valuation and everything else kind of follows.
And it feels like there's been, this year, when I started this conversation, given the change in valuations after some IPOs, I think this conversation has changed a lot. And I just wondered, in your conversations with investors and when you're talking off stage with investors, is profit a bigger conversation than it was a year ago, or have things changed at all, Lucy? Whenever you're talking to people, or?
I think profitability is something that people look for ultimately, regardless of what has happened in the market. But it also I think it's a trade-off sometimes when you are growing the company. How profitable do you actually want to be, right? I think we have taken the priority to be scalable, and we want to achieve the coverage. We want to achieve the depth in our product first before we look at profitability. And it's something that we discuss, but I would say not as the top 1 or 2 things when we're talking to internally or with investors or just generally. It's
Mm-hmm. And Sunil, do you sense any change in conversations? Is there a different, I don't know, just in terms of how investors are, whenever you're talking to, having these conversations, is there a change in attitude towards, I don't know, call it value-backed companies, or I don't know, just has perception changed in recent months?
Not per se with conversations with us. I think the unique thing about us is we're profitable. So, as part of our investors' portfolios, we've always been profitable, and we've always tried to manage growth and profits pretty much together. So we haven't seen that much of a change in the conversations with our investors. Our investors, have looked at us to build a generational company versus a company that achieves a certain valuation or a certain milestone at a certain point. And they've been incredibly supportive of that from the day they invested, and they continue to do so now.
Mm-hmm. And we have a question we have several questions from the audience, and I maybe wanted to go to Tim with one of these. The question is, how do you perceive the barriers to entry for your respective markets beyond technology? And I wondered if maybe if Tim, you have thoughts on that.
So I think especially what made it hard at the beginning is starting to protect you after sort of you've reached a certain size, because at the beginning I like when we came to market and I sort of started to speak to the first banks, there were lots of reasons they could think of why they might not want to work with us, because we were a rather small startup, we hadn't been around for ages, who knows whether we'll still be there tomorrow. So there are all these things especially in the fintech space, when your clients are banks, as in our case, our clients are the banks, they are our paying customers. To become a supplier, a vendor to a bank is, requires quite some work and due diligence, and that is definitely something that I think makes it difficult for new market entrants and protects the incumbents. The other thing is obviously in sort of marketplace models that is sort of, regardless I think of which industry, once you have a certain critical size and liquidity on the marketplace, it's going to be hard for someone else to really compete on the quality of the offering or on the pricing. So there's that going on, but I'd say that isn't special to fintech. The third barrier I think that is special to fintech is the regulatory space. Literally I had to sort of interact with regulators for about 3 years before we could launch, just to make sure that we're doing sort of value chain redesign in a sensitive product category. I just wanted to be sure that that was okay. That took some time, and that's something that protects you. And I think this is also maybe coming back to one of your earlier questions, what topic should be raised, especially from a European perspective. I think providing for a truly harmonized, unified, single European marketplace, also in financial services, is, I think, the single most important thing that could help European fintechs. Because effectively, everyone's talking about a single market as if it was a reality. And the fact is there are some European directives which are implemented into national law, and there is different regulatory practice, and there is different national implementations. And it effectively means that going into another European country, even though you can passport and all these things, is like entering a completely new market almost, right? And I think, of course, once you're in the market, it kind of protects you. But when I look at competing on a global scale, European fintechs competing with US fintechs, for instance, with a large home market makes such a difference.
Yeah. Well, and I'd like to contrast that perhaps, Lucy, with AirWallex. And there's certainly a very high regulatory moat for some financial services. It seems like in payments and remittances, it might be more competitive in some respects. Is that true? Because I get the feeling, regulators would like for there to be a lot of competition in payments and remittances. I would think.
I think what people often get confused by is they mix all of the payments players and all of the remittance players into one category, whether by customers, by the market, or by regulators. And I think but if you really deep dive into the whole industry itself, it's actually very different in terms of the payment value chain. There's acquirers, there's people who do fraud, there's people who do payment distribution, peer-to-peer remittance. So it's actually a very different market. And even though we're all categorized as money service providers by most of the regulators in the world, you still need to present the exact business model and how you're different. And I think a lot of that is also a barrier for entry, because it's understanding of the industry itself and your integration and your interaction with your customer that makes a difference.
This question, do analytics play a role, or do having unique data sets? Do those also play a role in kind of having that moat or that barrier to entry to have competitive advantage? Is that also a piece of it, or?
I think absolutely. Especially in the B2B space, being able to provide the data analytics and be data-driven as a payments company is crucial when you're trying to expand your product offerings. So, for example, the payment data about a customer can say so much about their trade activities, about their seasonalities, about their preferences, and in turns, you can also provide different types of services to that client and make their life so much easier with the data that you have collected from your payments. And for any business, your payment data is basically your behavior as a business. Mm-hmm. So, yeah, absolutely.
Yeah. Well, I was curious about OakNorth as well. I mean, it's on the one hand, it's a licensed bank, and the UK seems pretty open-minded and wants to encourage competition and wants to see new companies building up. But at the same time, that still seems like a relatively high barrier for some companies to meet that threshold. I just wondered how you look at this barrier to entry question.
Yeah, I would say think of us as two different halves. So we have the regulated bank in the UK, but our bigger business is really taking the platform that we built for the UK and selling it and working with other banks everywhere else in the world. And the UK bank then becomes our proof point to say that our analytics and our data sets and everything else actually works. It also becomes our test lab to be able to test new features. But in terms of competitive dynamics or barriers to entry, all of us work in regulated markets. We all work with the large financial institutions. So we're both helping push pace forward, but we're also working with these institutions, not just competing with them. I think if I go back again to the central thesis of customer value is really what the biggest moat is in any of our businesses. There's plenty of data. Our business is a credit analytics, a credit science business. So our foundation is having large data sets, being able to aggregate that with machine learning, being able to apply human intelligence with credit analysts. But that's really the barrier to entry. It kind of goes back to the point you made, John, earlier about talent, about working across regulated industries. Bringing all of that together, as everyone here probably feels, is that's incredibly hard to do. And that becomes your moat over time.
Got it. Well, thank you so much. We are completely out of time, but I just wanted to thank so much Lucy from AirWallex, Sunil from OakNorth, and Tim from Deposit Solutions. Appreciate it.